Welcome to the video series on corporate accountancy. This is Satish Kumar and Mahale, Assistant Professor of Commerce, Government First Grade College, Bada. In this video, we are going to discuss about redemption of debentures by insurance fund policy method. In the earlier videos, we have discussed about the concept of redemption and the various ways in which redemption or repayment of debentures is made. We know that generally redemption is made or debentures are redeemed either in installments or at the end of the period. In this method also, the debentures are going to be repaid or the redemption is going to be made at the end of the period. But the question arises from where the amount is going to be raised. Okay, in this method, what the company will do is from the date the company raises its debentures, on the same day the company will invest a sum of money in an insurance policy, and the company is going to match the redemption day with the day in which the policy is going to be realized. So the date in which the insurance policy is going to be matched in a to repay the debentures. Let us have the look at this method in detail. Under this method, for the purpose of redemption of debentures, the company purchases an insurance policy for the amount required for redemption of debentures after a specified period. For this purpose, a fixed amount of premium will have to be paid to the insurance company. The insurance company will be realized, the insurance policy will be realized at the time of redemption of debentures, and the debentures are paid without affecting the working capital of the company. This method is also known as redemption of debentures out of profits because premium amount is provided by debiting the profit and loss appropriation account. Let us have a look at the journal entries that need to be passed in this method. At the beginning of each year, we know that annual premium amount has to be paid. Premium amount has to be paid for whom? It has to be paid to the insurance company. So, for the payment of annual premium amount to the insurance company, the following entry is passed: debenture redemption fund policy account to bank account. So, this entry is made at the beginning of every year. At the end of every year, the following entry is made. Although the debenture redemption, although the premium is paid at the starting of the year itself, but the amount is appropriated at the end of the year to the profit and loss appropriation account. So at the end of every year, so the for the appropriation of the premium amount, the entry we pass is profit and loss appropriation to debenture redemption fund account. So these two entries are passed every year until the last year. And at the last year, the following entries are to be made, which is one of the entry for the receipt of policy amount. Okay, from whom are we going to receive the policy amount? We are going to receive the policy amount from the insurance company because we have paid premium for n number of years. So at the end of the period or at the end of the maturity, so we are going to receive the policy amount from the insurance company. So when we receive, what will be the entry? The entry will be bank account debtor to debenture redemption fund account. Okay, and next entry will be the transferring of profit on policy account. Okay, what is the profit on policy? Suppose we invest rupees 10,000 every year in an insurance policy for 3 years, say. At the end of the third year, we will not get only 30,000, we will get more than 30,000. So the difference between the amount invested and the amount received at the end, which will be termed as profit for us. So how this profit is treated? It is treated in the following way: debenture redemption fund policy account to debenture redemption fund account, and ultimately the debentures have to be repaid. So repaid to whom? It has to be repaid to the debenture holders. For this, the following entry is made: debenture account debtor to bank account. And for transferring of balance of fund account, so what do we do is debenture redemption fund account to general reserve. Amount which is collected in the debenture fund account is first transferred to general reserve, and ultimately it is paid to the debenture holders. Let us have a look at the illustration. On 1/1/2011, Naveen and Company Limited issued 4 lakhs 12% debentures which are to be redeemed after a period of 3 years. The company purchases an insurance policy for the redemption of debentures. The annual premium payable on the policy at the beginning of the year is rupees 1,24,000. Pass the journal entries and prepare the necessary ledger accounts. Okay, let us understand this problem. What this Naveen company does, it raises debenture worth rupees 4 lakhs. When it raises on 1/1/2011, and when it has to be redeemed, it has to be redeemed after a period of 3 years. So 3 years completes on 31/12/2013. So this is the day when the policy has to be redeemed. So what do we do when it has to be redeemed? So where we are going to pay the money from? So where we are going to pay the money? So the company is going to pay a premium to whom? To insurance company. So how much is the premium going to be paid? The company is going to pay 1,24,000 at the every year. On what assumption? It will get 4 lakh rupees from the insurance company at the end of the third year, and that amount is going to be settled to the debenture holders. So we have to pass the journal entries and prepare the necessary ledger accounts. So we have discussed the journal entries earlier. The same journal entries we are going to pass it. So debenture, firstly on 1/1/2011, so this is the day what we are going to do. This is the day when the debentures are raised. So this is the day what we are going to do. We are going to policy. So debenture redemption fund policy account to bank account. So 1,00,000. At the end of every year, we are going to make appropriation. So at the end of the first year, profit and loss appropriation account to debenture redemption fund account 1,24,000. Second year beginning, we are again going to pay the premium amount. So debenture redemption fund policy account to bank account 1,24,000. End of the second year, that is 31/12/2012, again we are going to make the appropriation for 1,24,000 rupees. At the starting of the third year, we are going to pay the final premium of 1,24,000 rupees. So debenture redemption fund policy account to bank account. We are going to ultimately receive the money from the insurance company. So what we are assuming is we have received 4 lakhs. So for that, the entry is bank account debtor to debenture redemption fund policy account. So 4 lakhs. 4 lakhs we are assuming that it has been received from the insurance company. But when we see above, we have paid 1,24,000 for 3 years, which amounts to 3,72,000, but we have received 4 lakhs. So what is the difference between amount invested and amount received from the company? We treated as profit. So the profit of 28,000, as we discussed earlier, this is passed to debenture redemption fund. So debenture redemption fund policy account to debenture redemption fund account. So we are transferring the money or the surplus or the profit amount. And lastly, the debenture redemption fund account debtor to general reserve. So we are passing the total amount of 4 lakhs which is collected to general reserve account. From here we are going to do what we are going to do. We are going to repay the debentures. So what is the journal entry we are going to repay the debentures? It is going to be debentures account. In this case, it will be 12% debentures account to bank account 4 lakhs. So this is the way we are going to pass the journal entries. And I hope the journal entries are clear. And from this picture, from this journal entries, it is clear that two major ledger accounts have to be opened. One is a debenture redemption fund account and the debenture redemption fund policy account, or simply the insurance policy. Let's have a look at the insurance policy account or the debenture redemption insurance policy account. Both are the same. So at the beginning of the year, so what we are going to do, so to bank account. So we are just this ledger account is prepared on the basis of journal entries. So we know that every year this insurance policy we are paying 1 lakh 24. So first year we have paid 1 lakh 24, second year we have paid 1 lakh 24, we have paid 1 lakh 24, third year end we have realized 4 lakhs amount is transferred to debenture redemption fund account. So I hope this is clear. And another important journal entry, sorry, ledger account what we have to prepare is debenture redemption fund account. So how we are going to prepare this account? So we see that every year from the first year appropriation is made. First year appropriation of 1 lakh 24 is made. Second year also appropriation of another 1 lakh 20. See that total balance carried down is 2 lakh 48,000. Appropriation done for the second year, third year and final year is 1 lakh 24, and the profit received is 28,000 for the, and the total amount of 4 lakhs is transferred to general reserve. And from here what we do here, from this we pay the debenture holders. I hope this method is clear. The important thing about this method is keeping in mind the journal entries and having a proper understanding of what is asked in the problem. Keep in mind the journal entries, passing the necessary and preparing the necessary ledger accounts. I hope this method is clear. Okay. Thanks for watching this video. Until the next video, see you. Bye.